Welcome to ETFutures.com. It's Friday, November 9th. I'm Remy Hokie for your Commodities Recap. NYMEX crude oil futures ended up with gains paring back from earlier losses. The benchmark crude oil contract gained 86 cents or 0.9% to close at $96.32 a barrel. Prices gained over concerns about U.S. inventories as well as geopolitical tension. In other petroleum products, NYMEX December heating oil gained 1.3 cents to close at $2.6188 a gallon. December RBOB gasoline rose 1.8 cents at $2.4560 a gallon. And in the metals complex, COMEX gold futures ended down on the session, but gained $26 on the week. December gold settled down by $2.80 at $834.70 an ounce. And in other metals, December silver gained 3 cents to close at $15.545 an ounce. December copper fell 5.85 cents to close at $3.4555 a pound. Rounding out the action in metals, January platinum tumbled $47.60 to finish at $1,426 an ounce. This afternoon, we're joined by Derek Frey, head trader at ONF Futures and Options. He'll recap today's session and give us a short-term outlook for energy and metals futures.
Okay, taking a quick look at the action that we saw in the metal and energy sectors today. I'll start with metals. We've seen both gold and silver pushing to levels not seen for 25 plus years in the last over the course of this last week. However, we failed to reach, in the case of gold, the Hunt Brother highs of the 1980 highs, and in the case of silver, we're absolutely nowhere near those levels. So the overwhelming trend is still up, but frankly, our models and everything have given us some short signals here on the latter half of this week, and we are now short gold. I am expecting gold. Basically, I'm expecting to see 800 before we see 850 again. And you will see $1,000 an ounce, but it won't be this year. And it will very likely be next year, probably the second quarter of next year. But look for gold to begin to back off into next week. A little bit more than we saw today. Today we only saw a few dollars down. But like I said, definitely look for gold to crack the 8.25 level early next week, and then push on back down to 8. We could fall further than 8, frankly, but at this time it's too early to call that. So bottom line in the metals is look for a correction. If you're long, get those stops tightened up, because it's, like I said, you're likely to see 800 before you see 850 again. Moving over to energies, kind of the same story there. We've seen, all week we saw the media trying to jawbone crude to $100. They failed to be able to do that. My call here is very similar to my call on gold. I think you're going to see $90 before you see 100. Same thing as gold. You will see $100 a barrel in crude. It's not a question of if, it's a question of when. But our models do show that it's more likely to correct back to 90 and possibly even a little lower than that as well, but at least back down to 90 before we resume the uptrend and the march towards 100. Of course, the situation with Pakistan and all the other crazy things that we have going on in the world geopolitically could change that in a geopolitical sense, but if in terms of technicals and everything else, both of these markets are pretty overbought, and the fact that the momentum was unable to penetrate those high levels, 850 and 100 in crude, 850 in gold and 100 in crude, is pretty definitive proof for our part that they won't be unable to pierce those levels in the very near term. So, like I said, overall, look for corrections to ensue next week. And look for that one-way street called the dollar down to also start to reverse. We've already seen the dollar begin to gain against the Canadian dollar. That tends to be one of the first currencies to react to dollar strength. So look for the bid to come back into the dollar. The fact that every guru, media person, and everybody else is saying down in the dollar is frankly a clear buy signal for a contrarian like myself.
That was Derek Frey, head trader at ONF Futures and Options, with his commodities commentary. I'm Remy Hokie. Join us later, 4 p.m. exchange, right here on ETVFutures.com.